Hi guys, Mitch here from Finance Fitness Coaching. Just wanted to touch base with you again and discuss the wheels of wealth. Very important that you look at a strategy that allows you to build a bankroll and keep going to create a multiple property portfolio. So essential that the storage of capital and the cash flowing assets that keep going. So let's have a look at how we do things with our clients and how we do things in our own personal accounts as well. I believe that you can't really teach this information unless you're doing it yourself. The team at Finance Fitness are all investors ourselves. We have a team of other like-minded investors and third-party people that we would refer you to should you require solicitors, lawyers, conveyancers, accountants, tax structure specialists, bookkeeping, all that sort of information. Very important as part of your success team, having about 10 or 11 people as part of your team. No one gets anywhere without having a team behind them these days, and the team at Finance Fitness can help you introduce you to those experts if you so desire. So let's talk about the wheels of wealth. Right at the moment, we've got, let's say we have available capital of, $400,000. Okay, now here's where the wheels come in. I'm only ever interested in two forms of asset classes, and that is capital growth type assets and positive cash flow income type assets. So it's very important that we look at our portfolio as it stands today, and what we're trying to do is turn this $400,000 and get as many assets around these wheels as possible. But we do it in a smart and strategic way. I've seen people over here that just do nothing but build assets in a capital growth type way. These are houses on the beach or in the city, but they've got a negatively geared portfolio and they're working forever to support their real estate habit. I've seen people over here that do nothing but build assets around their cash flow wheel. But every time you do that, you suck the life out of your available capital, or what we like to call your bankroll. So there's other things as well that you need to think about, and that's buffer accounts. So I have a buffer account, and I encourage my clients to have a buffer account for investment and for personal. So you never know when things might happen, and it feels a lot safer at night when you have a buffer account for both investment and personal. It's very important actually, because over the years you never know what might happen, some underpinning or plumbing or etc. And if you're owning and controlling a multiple property portfolio, it's very important that you can fix stuff very quickly and you get a lot of discounts and you keep tenants long term. So remembering, we're going to try and turn this $400,000 into the wheels of wealth. So the name of the game is to try and get as many assets around here as possible. Now I tend to like to have more cash flowing assets that bring in a positive cash flow income than I do my capital growth wheel. Over here, I don't mind if this is real estate shares or a business, as the purpose of this wheel is to put $100,000 down or $200,000 down, do something like a subdivision or a renovation, and then make some profit. Let's say I'm making $150,000 profit, so I've taken out 100 over here and I put 150 back, so now I'm at 450K and I've sold that property. So the idea was to generate a capital growth. I do these type of properties near me so that I can deal with council, strata titling, renovation, all that sort of stuff. Over here, I've now got my capital and I've got say 450. I might say, that's great, let's take out another 100 and go buy ourselves a cash flowing positive property. Now these properties I do anywhere that makes sense. I tend to stay in the southern states of Australia because it's easier to manage. I like these properties to have a long-term value, a long-term hold. So I will take that 100K or 50 of it anyway and move it over there, and then I've now got 350,000 in my available bankroll. Now this bankroll could be from you, could be from an investor, could be from your line of credit on your own home, could be from anywhere. And then I tick that off, and let's say I've made 6 or 8K a year passive income. And then I say, okay, now I've got my 350,000 back. Let's do another one of these deals and try and restock our capital. And each time you do one of these deals, you're going to get better and better and better. And you might do a subdivision, keep one of these houses, store it over here. But all the while, we're trying to restock our bankroll and then take that available capital and buy these 4, 5, 6. I like these properties to then pay for any negatively gearing assets over here. So I still like my capital growth assets, I just don't like to pay for them. I like to have my cash flowing assets pay for these guys. So in a nutshell, that's the Wheels of Wealth. There's more information, obviously, than this, but in an upcoming seminar soon, we'll go through this in great detail and take some of your questions.